have to on 3 more targets, and all got taken.
Dang. Good, well done.
Yeah.
Well, for the CAD, I wanted to short the CAD. I mean, to go along the CAD and short the US dollar. Ooh,
Oh,
that was because you dropped 100 pips.
150 pips altogether.
It's like that. Let's see. It's going to the,
But I got like maybe 60 out of that.
okay.
It was really forceful.
That was beautiful. Yeah, 156 from top to bottom.
Yeah.
155 from top to bottom.
Yeah, but who would have known at that point, right?
This is where, yeah, we need to discuss, like, this is definitely a good one. You entered right there, all the way to the bottom is 150. But I guess it's just a matter of, are you happy with the result? Yes or no?
Yeah.
Because at the end of the day, it's still also in an uptrend, right? And you're absolutely right. Who would have known?
Yeah.
But nevertheless, this is where the trade management plays into play. 3290, 329073, 32906. It's still higher high. That created a lower high. Very nice.
So here, these two peaks, aren't they identical? Because after news yesterday, it hit this peak and then it started dropping.
It's up
this
by
is
one pivot.
one. Okay.
32890, 32889. That's it, just by one pivot. So that's why with one pivot, that's why I mean, this is where the objectivity comes into place.
Mm-hmm.
Price or numbers, they don't lie, right? It's
right.
Purely objective. Even with one pivot, it makes a big difference. Calculations, even with your Morningstar patterns, it has to be equal or greater, or else it won't work. Even one pivot, you miss by one pivot, definitely it won't work. Okay, so okay, what worked this week is you close your losses quickly. What else? What else worked for you this week, Demir? Because since for the past 3 weeks or 4 weeks.
Yeah, am I really that lucky, or am I really following that rules? Because reality is neither.
Well, what is how many weeks do you need in order for you to prove to yourself that you're not in luck? Because the first week was what was your result? First week was like 16% or something like that.
Something like that, yeah.
And then second week was about 20% or something like that.
I believe so. Yeah. This summary look into summary is kind of painful.
Yeah, and then the third week was approximately like 15% or something like that. 12.
Yeah, it's consistently. Yeah, it's usually more than 10% a week.
Exactly, and then this week was more than that.
I think so. Yeah, it was at least 20%.
Yeah,
because I was some 50% up.
You were 50% last week, which I remembered, and now you are at 70 or probably even more.
So Reynaldo, it's been a month. I started on June 18th.
Exactly. So if you actually let's do this. Share your screen for me for a second, please.
Sure.
Hey, Jared, how are you?
Hey, Ray, doing well, thanks. Hey, Demir.
Hey, how are you doing? Everything okay?
Good. Yeah.
Are you sick?
No, just woke up.
Did you trade this morning, Jared?
Yeah, I did.
Okay, cool.
So I put one trade in and I lost on yen.
That's okay. Can you go to your Wanda for me for a second, please?
Yeah, sure. But it was on my demo account, so I could care less. So here, I pulled $20. Huh?
You don't have any more, right?
What's that?
You don't have any more.
I don't have any more what?
Trades. Everything's all clear.
No, I don't. They were all taken.
Okay.
They're all gone.
All right. So for this one, net asset price is 149. So you're up 49% for this.
No. So overall, I pulled $20 from the account just to see how it goes. So I'm really 70% up.
Okay, got it. Got it. Okay, can you do me a favor, please? If you
Yeah.
click on account. Oh, here there on the bottom, trading performance.
Trading. Where on the bottom?
Oh, it's on, yeah.
Here.
Yeah.
Okay, I'm clicking on it, but it's not budging. Oh, okay, something is coming. Oops, I overdid it.
There's one thing I love about on that FXM doesn't do.
Okay.
It's still loading.
Your account statistics cannot be.
That's weird. Okay. If not, then click on account, please.
Where here?
Yeah. It's account. Oh,
Account statement.
Hmm.
Trading performance.
Yes.
Maybe I clicked too many times.
Maybe.
Yeah, there we go.
Alrighty. Here we go. Your win rate is 63.7 since.
Okay.
Also, the 20th of June till July 20th, right? So 20th of June to total pay.
Yeah, a month.
Okay, and it shows the pairs. Best 5%, worst 5%. So those are the dollar CAD was, you made 25% was based on the dollar CAD.
Let's see, yep, euro.
And if you keep going down for me, please. Middle best 5%. Okay, on P&L is $30. So notice that, which is great, that your losses is smaller than your wins, right? So despite a 68% success rate for the whole month, and you made 70%, it's awesome.
So okay, let me see. So yeah, $70. I don't understand this. I don't understand that. Risk to reward. So I always have high risk. And 80 trades.
Mind you, though, that's one thing I don't like about just the word risk to reward, because how about the probability of it, though? You might have a high risk, but you have a probability of reward, then will you take the trade?
Yeah, that's what I've been doing, right? It's been working.
Which you would, right? Alrighty, so you can scroll further down for me for once.
Oh, I clicked on risk to reward. So can I unclick here? Yeah. Let's see. This. My 3 worst trades. Yeah, yen.
That's okay, but at least you closed it quickly, which is great. All right, if you go further up for me for a second, please. All right, let's go to the win rate. Win rate greater than 50%, win rate less than 50%. Interesting.
What does this mean? Is this helpful? The black line shows a win rate of 50%.
50%? That I don't know.
Okay.
50%.
Total profit and loss.
Yep. So there's your total P&L in terms of $70. And then if you go further up. Oh, what's the outliers? Can you go through the outliers, please? Okay. It shows there the 18th. Okay. Cumulative P&L. Beautiful. See that in terms of the cumulative, that's what you want.
Up, right?
I'm sorry?
I want to go up on a staircase.
A nice curve of progression. And then, of course, in between is, you'll experience certain, like a graph, up and down. But as long as it's like that, all that matters. The worst thing is this. You go boom. And then you
What is the worst thing? This wait, that okay.
okay. So if this is your graph, boom, and then negative, and then you have to go back to break even, and then yeah, I want to do that.
But with this risk management, it's unlikely to happen, right?
Yeah, at the end of the day, it's your way of managing risk, right?
Mm-hmm.
And so, like, say, yeah, this one here, a little bit here, a little bit. So it's good. That's a good one.
Oh, sorry. Yeah. Mm-hmm.
It's okay. That's a good graph. Have you met Kate?
Nope.
Not right. Kate was one of the students, Caitlin actually, and her graph was actually like this. So if this is 0, hers was on the first, I don't know how many months. Always she was like losing after losing, but she was writing things down. And then at one point we have trading competitions. She wins every month, and that's her.
Oh, yeah.
So if this is 0, then she was losing, and then yeah. Me, because I didn't have the same education like you guys, mine was like this. And then bam. And then I had to start again. It took a while in order to get up in there. Yeah, that's why you don't. Here was the biggest learning curve. So everything you see fit here, like here. That's why losses are important when you're training, because this is your learning. What you learn from those. Not this. You don't learn from those. It's good to profit, right? At the end of the day is, now that we see that your statistics, how can we make that better? I know we can't win all the time. So in terms of consistency, see, there are a couple of things you need to be aware. The awareness of thoughts. Notice how you question yourself. Am I just lucky? Okay. I'm lucky. Well, for the whole month, do you think that would be luck?
Yeah, it's highly unlikely, but you know there were quite a few trades that were on the brink. Like when we had live trade when I was in Boston, and then I wanted to sell, and I think Jared said to buy.
Okay.
Then yesterday I wanted to buy, or a couple with you, I wanted to buy, and Jared said to sell because of that demand zone. So you know these are things that I didn't see. But so the good thing is that I listen and process what you guys say.
Okay, there you go. So talking about that is listening and processing is what you learned, and processing what's right for you. Because in trading, there's definitely no right or wrong. Everyone can go long, everybody can go short, right? And what makes the market? There's a buyer, there's a seller. Can a seller make money?
Yeah.
Can a buyer make money? Absolutely. So it all depends on the intention of the trade. However, as long as we see things objectively the same way, then that's all that matters. And then from there is to create the plan out of that on what you want to do. Right? Say, for example, I'll use your CAD chart there on the bottom, please.
Sure.
Demir. Yeah. For example, let's take this one. Someone might be able to go long, someone will be able to go short. Well, the person who have shorted made money over here. What if the person that wants to go long, can they make money going through there? Absolutely. Right? So someone can sell, someone can buy. Someone who is buying here, though, definitely will lose. Someone who's selling over here, though, will lose. Because it's the nature of the game. It's a zero-sum game. But how does it work is, well, everything is timing. Timing. Well, this is 1 hour. What if someone went long over here and they're just there to make money from that portion? Absolutely. Can make money within 1 hour from this candle. Definitely, for sure. But if they're dealing back to the 1 hourly, maybe not. The chances of them not making money is very slim. But if you're doing 1 minute, 5 minutes, yeah, definitely. Okay, so those are the things that I could see. Okay, so what else worked for you?
1 hour and 4 hours.
Okay.
If I try to do what Jared does and look into 15 minutes and smaller time frames, if I get excited, then that doesn't work.
Okay. Gotcha. So it's like jiu-jitsu, right?
Yeah.
Your own jiu-jitsu. So probably you've heard me say numerous times, it's just if it's working, don't change a single thing. Keep going at it and focus on the little minor things that you can improve on. Like an engine, right? So if it's out of tune, then you need to go to the mechanic in order to tune the engine. Same thing in trading, just fine tuning which one will work for you.
Right.
Right. Anything else, Demir?
So I think I started getting the STS.
Okay.
I would, well, so the reason why, I question my competence and luck is, Jared, this game that you gave me, I forgot what the name for the game was, with the historical stock prices. So when we played that together, initially I was winning big time, but then when I was doing it on my own, it just went down the toilet. So I took a couple of loans. So I still lack some fundamental understanding, meaning that I'm far from, for being capable of doing this independently.
Okay. So there you go. Then how can you be more dependent? Just keep
yeah, so that I was with my kids and I was traveling and whatnot. So if I can do this when I cannot be 100% committed, then I do wonder what is going to happen if I'm fully committed to it. I understand it doesn't require 24/7 attention, but it's definitely appealing.
Absolutely.
And the whole concept of sleep and exercise and psychology.
Exactly.
I need to work on all of that and get it to the next level.
I just noticed you only traded 2 times since last week. Friday the 13th, I remember it.
Yeah.
So you only traded Tuesday and yesterday. Tuesday and Thursday, right?
Yeah, so when we discussed, you said to wait, and I didn't know what to do, and I thought, I may as well sleep over and see what is going to happen.
Okay. Yeah, so that's pretty cool.
Yeah, you want me to scroll down? Let's see where.
Euro, US dollar. Because the rest 13, the 5th, 28.
So definitely I can trade more, right? Maybe on different time scales.
Well, to be honest with you, for me, it's not a matter of how many times you can trade. What will work very well is picking high probability trades. High probability trades I believe, I think, I don't know if you'll agree with this, Jared, but if you choose your high probability trades, this will increase more of your consistency. Like hence, so it proves to show once again that you don't have to trade on a daily basis if you don't have to. If there's a trade, then trade. If there's no trade, no trade. If you are uncertain, then do like what you did. You go through your demo, right?
Right.
The queen is mainly managing. So let's say what you did over here is awesome because, like, say, look at a progression. Maybe here 109 to 122 came back down a little bit. 121, 118, 119. It wasn't bam. It jumped to 138. Jumped to 144. Jumped to 160. But here you managed the trade back to 160, 156, and back to 134.
Oh, 134 is because I withdrew $20. I wanted to see how long it's going to take to appear in my account.
Got it. So,
because they said it may be a whole billing cycle, which is nonsense. It was like a couple of days.
So 156, and then probably went to 170. Then you withdrew, right? So
yeah, I guess.
pretty good. That's my take on it. But nevertheless, these high probability trades what matters.
Right. So what I meant to say is that I still don't get all the trades at the right time.
Mm-hmm.
Like they're a bunch of M3s, but I just come in late because I don't have consistency in checking the markets. And I keep on saying that I'm going to automate it. Yes, I am, but it's going to be, I don't know when that's going to be. In the near future, the sooner the better.
Well, let's discuss that. What didn't work? Well, didn't work is that needs to improve timing, right?
Yep.
Well, then what's the solution for that? Think of solution. Create an alert system for M3s and M2. You can what else? What else didn't work for you? So one is needs to improve timing. Then the solution is to create an alert system.
Right. So at least now when I get in, my entry points are closer to the moving averages.
Okay.
So I got better in that. But it's just, for me, being more aware of the opportunities and being on them. So yeah, alert system would be ideal.
Okay. What else?
Practicing and backtesting. So I tend to do this after the fact with fibs, but more focused backtesting.
Okay. All right. Okay. Sorry. What didn't work?
And I would like to really simplify TCL. There's a lot of useful stuff in TCL, but then I feel that I lose a lot of time doing it. Okay. Whereas the gist is, what is the entry? What is the stop loss? What is the relationship of the markets? So now I'm taking it for granted. I'm focused on all these psychological things. I have nobody else to blame but me.
Okay. Just 1 second, okay? Hang on a second.
Yeah. Jared, how are you doing?
Good, Demir. Hey, so about what you were saying about the TCL.
Yeah.
The reason I guess there's so many layers to it is because trade analysis requires that many layers, I guess to say. Especially if you're doing longer term time frames, doing the TCL uses relatively less time, right? If you're trading a 4 hour, you have 4 hours from one candle to the next candle to do all the stuff. So makes it a lot easier when you're on the bigger time scales. But a lot of the stuff in there, I look to try and improve the TCL, and all I did was just make one modification. It wasn't even that important. It was like adding something.
Right.
but everything else is covered by it because
Mhm.
it's all critical to your trade, I guess to say.
Yeah. So, to get over quickly, I need to know how much I need to put in.
To the account?
No, no, no. How many lots do I need to put in, right? And that's based on the stop loss and on in the entry price.
True, right off the bat. Yeah, if you're
Yeah.
comfortable with your analysis. If you're
Yeah.
not comfortable with your analysis, it's good to go through the whole TCL to create your overall probability. And then that'll give you the proper amount to risk.
I
You know what
see.
I mean? You can't do it the other way around because then you're guessing.
Well, I'm guessing with probabilities because I'm gaining experience with it.
Yeah,
I,
exactly.
I'm going. So I don't have systematic way of tabulating really what's going on.
Hmm.
I
Okay.
mean, so what I would probably need to do is automate all this stuff and collect statistics.
Are you good with the Visual Basic by any chance?
Well, I'm good with Python.
Um, how like if you be able, the TCL,
Yeah.
is it possible to create a like almost like an online thing and you just type it in, bam, 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 and then yes, no, click, 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 and then you can just print it out?
Right. So I was thinking of getting a time frame in time, and let's say getting all these market pictures, right? So you can say, is it bullish? Is the dollar index bullish, bearish, etc. So take a snapshot. So that's doable.
Um,
Uh,
like what I meant was the TCL rather being in Excel spreadsheet form,
yeah.
you have like an app type, and you just basically type it in using the with your computer,
Right.
click, 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 and
Valid.
at the bottom press print, and then bam, or print to a PDF. You know what I mean?
Yeah, that would be nice. So I can work on this as soon as I get out from this job that I don't
Okay.
like.
So, but it is doable.
Yeah. Oh yeah, it is doable. Yeah, it
Okay,
is
and then
doable.
can that be linked as well in terms of having a link
Yeah.
in terms of
Yeah.
a chart?
Yeah.
Oh, so it can be done.
Yeah,
Ooh.
yeah, yeah. It can be done. It requires a little bit of time. So I wanted to put it in a Google spreadsheet, and
Okay.
then you can access that programmatically. And maybe you can set up a little configuration file, a text file, where you can punch in what you're trying to do, the entry and the stop loss, and everything else gets generated.
Yeah, I mean, if you could hook it up to the website and then on the member side, bam, everybody
Uh-huh.
have access to it. It'll be easy.
Yeah.
You know what I mean?
So yeah, I'm going to work on this, but it's not going to happen overnight normally.
It's okay. No, no, no. Whenever you have it, when you have time.
Yeah.
But if it's as long as it's doable, then that'll be awesome.
I think it is. Yeah.
Cool. All right. So what I wrote here for you. Sorry. Let me. I'm gonna change it back to my screen for a second. Okay.
Okay.
All right. Correct me if I'm wrong. Okay. What worked for you this week? You closing out your losses quickly, like your yens, listening and processing what's right for you. Your 1 hour
Yeah.
and 4 hour time frames work. It's not
Mm-hmm.
too long, not too short. I
Yeah.
believe that's also part of your when we did your profile,
Yeah.
three-dimensional profile.
Yeah.
Understanding the STS is coming into to play.
Mm-hmm.
What didn't work? You need to improve your timing.
Yep.
Solutions to create an alert system for M3s and M2s. And you said the lack of practice in backtesting, and so your
Yeah.
solution.
Systematic. It's systematic backtesting.
Okay.
So I don't have my own numbers.
Okay.
I'm still
Gotcha.
using your numbers and Jared's numbers.
So, but at the end of the day, in terms of your consistency, I believe you just have to keep on doing same thing what you're doing.
Mm-hmm.
And hence, from what we discussed the other day, yeah, maybe test it out with a bigger account.
Mm-hmm.
Feel me?
I think that's what I'm gonna do. Yeah.
Yeah,
Go to a bigger league.
exactly. And then, just to test and see in regards to your psychology with an extra zero in there.
Right.
right?
Yep.
At the end of the day, I mean, percentage is percentage. It doesn't lie.
Mm-hmm.
What's the most important part is the process, from your psychology to all the way to your skill set.
Right. So what I feel is that I'm not really 100% in it,
Mm-hmm.
and the more I would expect, the more I do it, the better results I have.
Yeah, absolutely.
So I'm really upbeat about it.
Have a 68 to 70% success rate is good. Right, it's very good actually.
Mm-hmm. So all I maybe needed in my life is 10 grand to get me started. and oh, there is some app that I have, and then every so often I get some messages, and it says that you want to be an MBA trader. What that means with the massive bank account. So I kind of like that. Yeah.
Love it. Cool. Anything else there, Demir? Any questions, challenges that you want to?
Yeah, this last night, I was sweating bullets when Trump came out of nowhere with his BS.
Exactly, because of the questioning and things like that, right? Okay, so let's look in terms.
There are these two candles, right here in front of us. What happened?
So let's look at 1 hour for a second. It was when this one came here. This was when we started to panic. This is 6 o'clock. I think Trump was still saying certain things. Created a new lower low already. So when something like this happens, because it all depends on where you entered over here, right? There's that gap of entries. And I believe we also looked at in class, we said that these are your entry points. 1639, 1627. 1627, this was the closest. 1626.9, which it did, it triggered it actually. And this is when we were texting, and I said, well, good, time to buy more, or time for me to buy, basically.
Yeah.
Right? Because this is your correction, and we discussed that. So the plan is simply to follow the plan. Now let me share also my experience. For me, I'm more like there's some form of emotion of regret. And the reason was I got on this side. I already have everything on this side. And I knew, or basically also that feeling that it's going to come back down to correct itself. So it went to 1790 and had an opportunity to get out at 1777, 1780. My grid got into place. I said, there's more room for this to happen, and I will get out when this will go to 18 something. But it didn't want to do that. So that is the 9th. Okay, so that's the 6th. This is Tuesday, Monday. And then all of a sudden, bam, it tanked all the way to 38 back to 62. So I missed this whole opportunity. It's 120, I have something 130 pips to the downside. It's almost halfway from bottom to top. And then it went up, then came back down again, and now it's back to where it's at. So I missed all this opportunity. I missed that opportunity. That's 100 and say even 170, 150. Say about 100 pips right there. That's 250. All the way down is about 160. So that's close to 400 pips. And now from there to there again, 150 pips. So my learning would be is that to always follow the plan when a plan has been created for you. And hence, this was our plan. It's just a matter of, and me working on the value and the principle of responsibility. Remember, there's three aspects of conditioning, right? You have your mental, technical, and body. The mental will be part of your values and principles, part of your mindset and your behavior. And they have to go hand in hand. This one is the action anyway, the body, mind, technical, and they all have to move in order for it to work. So my learning is that if I'm not responsible to follow my plan, to follow my plan is, and the responsibility, courage, and confidence. Also, those are the extra principles that needs to happen to follow one's plan. The courage to take the action to act when it's time to act. So patience will be included with that.
Right.
Because it takes time in order for it to brew. And by waiting like this, 1, 2, 3, 4, 5, 6 hours. 6 hours. Now, if you don't have the time to do it, and it's going through here, and it's falling, then the confidence and trust will also have to follow from there. Because panicking, like, let's take the word panic. Panic, what triggers panic?
Unknown.
The unknown.
Uncomfortable. Yeah, and uncomfortable.
Fear, right?
Yep.
You know, like jiu-jitsu, you know, when someone's on top of you and you can't breathe, people will panic because you can't breathe. And then that creates also anxiety. Anxiety, to have the anxiousness. Then from there, it leads to impulsiveness. When you get impulsive, what do? Then you react. Out of the reaction is to close the position. Because are you now being objective or subjective?
Yep.
So is it now subjectivity or objectivity, Demir?
Well, there were instances this week when I did something stupid subjectively, but I quickly closed.
Exactly.
Because I started panicking, yeah, and I thought, all right, let me sit this one out.
Exactly. Therefore, when it becomes now subjective, then trading is no longer objective. Then now you're trading based on emotions. When we get to this state, in terms of trading based on emotions, either you get injured or you lose, right?
Right.
I say injured is because something happened to me last night at training jiu-jitsu. So Rahul was using too much power through guard pass drill. Why? Because he just wants to
power through
it. And it pissed me off because he scratched my face, and then all of a sudden my ego came into place. Like, you know, I said to myself, "Fuck you! You're gonna stay down there." So what I'm doing, I'm using as well now power in order to pin him down. No longer using technique because I didn't want him to overpower. So nonetheless, when you're trading emotions, the awareness is so important, because when you're aware of those thoughts, then you're gonna go, okay, let me relax, let me chill, because if I'm gonna fight the way how he fights, I know for sure either one, he will submit me anyway, number two, I'm gonna get injured, and I don't wanna get injured. How do you translate that with trading? Everything. When you're trading based on emotions, the reaction when you're closing is losing. And hence that result is now a result of an internal behavior that is not part of the belief system. And hence that proves to show once again that our results is a total reflection of who we are. So yeah, just be aware that when that happens, how can you control that? Great. How can we be objective? Well, you know what? It's just a correction. It is still a lot of power. And we discussed this yesterday. Part of the piece of information is that when two opposing forces, remember physics, physics, if you can apply the laws of nature to trading, it makes a lot of sense. Like say this one is a law of nature right there. Perfect example. The trend is pointing to the downside, and you have a lot of force and pointing down to the downside. So imagine the amount of energy that this has to go in order to swim against the current.
That was exactly what I was thinking.
Yeah.
But then I saw this big red candle, and then I thought, oh shit. But yeah, exactly. I was looking in these big green candles, and I was thinking about the uptrend, but then what's going on?
Yeah. And then if now you focus on this red candle, but you don't, look at that, there's not much volume in there. But in terms of Newton, in terms of the force, this one is 3-4 times stronger than that one. Probably even more, maybe 10 times stronger. But for that to fight through everything you see fit here is just consolidation. Boom, there's another big push right there. That's a lot of force. And here's another consolidation. It'll have to do that in order to have another big force. So that being said, if we're not going to deal with a bigger time frame of the daily time frame, which is right here, notice that the price now closed on this major downtrend line. One of the trend lines already been broken over here. Let's actually let me move this one to there. I connected that, but if I connect another one, which is here to there, it's a clear cut that these two has now been violated. In other words, you need a lot of power, once again, and force to break this barrier. When supply meets a trend line, this is your strongest area where buyers are supporting or sorry, sellers are resisting price points. But once that's broken, you now have a free ride in order for this to head from there all the way there. You have this about 300 something pips. But the one that they have to test is this major supply right there. So that's another 100 pips. And now if you combine your beginner level skills, it's saying buy. Now, if we add volume into that, it's not as much as yesterday, but the force in conjunction and combination with volume has also got a lot to do with it. Therefore, the odds and probability, now, sorry, if you go back, let's go back to the beginners first. This is a buy signal based on the beginners, right? So technically, if you buy more or you buy something, you buy in this candle. Remember, you bought here at a wholesale price point. So just imagine the wave of buyers now. So here's the process. You're a trader, you're a full-time trader. And you bought at wholesale. Imagine your part-time traders. They will go home and analyze this chart and they're gonna say, hey, look, there's a breakout for pattern traders. There's a clear breakout. They're buying now at wholesale or retail. They'll be buying at retail.
Retail, yeah.
That's why they're retail traders. So imagine the amount of risk from the last stop is 149. They're gonna, 149, 150, that's too far. There's no way. I'm not gonna put my stop over there. I will put my stop right here. To gain a 2-to-1 risk ratio, that's 100 pips. Well, 2 to 1, then 50% of that, 50. I'll put my stop at 116.73. Well, guess what? Since that also has a lot of drive to the upside, what if they also want to correct itself for the price to come back down for the next 2-3 days before it can come back up again? That's a possibility.
Right.
This is what happens with retail traders, that okay, they'll put their stop loss over here, then they get stopped out. They're pissed off. The reason why they're pissed off, because the price went back now to where their major target point is. See, that's the thing, and now that's just because of the 2-to-1 reward to risk ratio. Their stops are at retail price point. Your stop is at where? Institutional price point, way below institutional price point. So what are the odds that you're going to get stopped out? Very unlikely. Probably a chance of 0.0001% that you're going to get stopped out. Right? So markets will stabilize, will correct to continue, or stabilize to continue. Those are the only 2 options that it can do. Either that, if it doesn't want to, then it will reverse and continue its trend to the downside. That's it. So how about your traders who are your, what we call pattern traders, who are seeking, these are now your confirmation. They want confirmation. Here is your confirmation. Maybe some of them won't be confirmed yet. So in other words, one of our methodologies, which is method 3, states that you have an opportunity when
the second candle closes above,
exactly, where price is now going to be at supply. So here they're going to buy still at retail. So therefore, by the time it's already up over here 2 in a row, where that's done, maybe it's way against now in terms of risk. Well, our major target point is somewhere here. So here, right? See the progression of methodologies and price and wholesale and retail price point. So what you just did yesterday is going through what we call multiple time frame analysis, using smaller time frames to get the perfect entry point, and then utilizing bigger time frame to see whether if there's more force for the price to get to where it should be. So in other words, if I'm going to go back on this side, is that if we're doing back to our basics where our supply errors are going to be, and if this is really the major supply, this is easy. It can go all the way up there. It will have a bear up here. The question is, can they create a new higher high? Once a new higher high will happen, easy. This distance, they have to cover that anyway. No doubt. 1, 2. The next one is here, 120. Right? And this is where the strategy of averaging up happens. As long as you can manage and there's enough and you're not over leveraging yourself so you don't get liquidated. But if you keep averaging up, comes back down, close some. From a form of correction standpoint, close some. I'm sorry, when it goes further up to supply, close some, correctional, buy some more, because it goes now in a wave, because this is now your new wave to the upside, in my own honest opinion, because very bullish. And I wanted the closing actually to go halfway beyond this bearish candle right there. But it even closed halfway beyond this candle right there. One candle that produces 1, 2, 3, 4, 5, 6, 7 days, this whole one right there, you have a lot of force right there. So in other words, they're now saying, based on a consensus of the masses of buyers and sellers, mainly buying, that there's now more value of the euro against the US dollar. So by you having that piece of information, then you will create more of the certainty in your analysis, and you'll know exactly what to do, whether you're going to hold your trade, whether you're going to panic or not to panic, right?
Mm-hmm.
Does that make sense there, Demir?
Yep.
Jared, did that help too?
Yep.
Awesome. Cool. Then how about you, Jared? What worked for you this week?
What worked was being meticulous with an analysis.
Okay, great. Did you profit this week or not?
Yep.
Okay, great. What else worked for you this week?
Just letting my plan do what it was made to do instead of in the past micromanaging.
Okay.
And yeah, because I was meticulous, I was able to stick with the plan and believe in the plan. So yeah, I guess that all finally went full circle.
Okay. Great. Anything else?
No.
All right. Okay, then what didn't work for you?
Let's see. Kind of like what we talked about on, I believe it was Monday.
Yep.
About having a plan for every time frame.
Okay.
I wasn't doing that.
Okay.
So yeah, that one didn't work. And this week I wasn't too diligent about checking the chart every like 4 hours to create those long-term plans. So
Okay. Certainly being diligent with managing trades.
You know how right when the 4 hour mark hits, you're like, okay, got to be at my computer at that time.
Yes.
Yeah, not doing that properly. I'd be like an hour late or 30 minutes late on an hourly chart or something like that. So,
all right.
Yeah.
So same thing. Okay, cool.
And then last one, position sizing. Back to that again.
Overly or underly?
Under.
Okay. Okay. I think that's what yeah, I think it happens to all of us. Sometimes we don't trust our own selves, right? Now, if you have all the proper piece of information in regards to the trade itself, will you take more risks, Jared?
Could you repeat that first part again? And
If you have all the pieces of information
Mhm.
that give you the confidence, will you add more risks, or will you take more risks and add more positions?
Yeah.
Gotcha. So I guess your homework for this weekend for both you, Demir and Jared, is I want you to get into a space, just have your own time and reflect upon what areas do you think you need improving on with technical analysis, with the technical conditioning part. To have, because I see the same issue is the lack of confidence and lack of trust because of lack of piece of information. So what are these pieces of information that you need to improve on so you will have those pieces of information in order for you to be secure, to have the confidence to either take more risks or to take action. Does that make sense?
Yeah.
Yep.
The funny thing is, I was discussing this actually with, I'll just share some of you guys in terms of with Kim. I said, in terms of relationships, what's challenging in a relationship is that control. What does it mean? Well, you can control oneself, you can control your own self, but you cannot control the other person. All you can do is simply not control, but accept the other person. And hence is why I believe, arguments happen, disagreements happen, is because of perception. One person will have one way of thinking and you have another way of thinking. And in between is that you'll have a good relationship if you have the same values and the same principles. But if one will no longer have the same values and principles, then it wouldn't work either. You see, for me, I find trading is the same because you're in a relationship with the market. And you, based on control, you can control you, but you cannot control the market. What you need to do is you also need to accept the market, and hence the objectivity. Here, you need the same thing. Unfortunately, it's gonna be subjective because of human emotion. As long as there's emotions involved, the market doesn't have a form of emotion because it is what it is. But when another person on the end, well, I'll take that back because the market will also have emotions where two people are basically also trading. But because it's a two-dimensional chart, it makes it that the market doesn't really care about us. And I had a talk with this lady who works at the Reserve, the Federal Reserve Bank. And talking to her, it proves to show once again, and I told her, I said, dang, it proves to show that I am so small in the whole pool. And I am just this minute, which doesn't play a big effect. Now, because we're talking about banks, talking about the Federal Reserve, And it's kind of cool, actually. I even wouldn't mind working for the Federal Reserve just to get that experience to see what's really like behind the scenes. And then she asked me, "Hey, I think you're going to be a good fit. If you're interested, let me know." But to really think in regards to how they operate, and they have all the pieces of information because they have all the data. And she's talking. She's pretty much she's a consultant, and she does all the stress tests for banks. And I'm like, holy craps! Like, to have all those pieces of information. That's why for her, she's not allowed to trade. She's not allowed to trade stocks because of all the big conflict of interest. But nevertheless, just to really fully understand where I'm at, I'm like, holy moly. So therefore, if I really want to be more successful, make more money, is also gain more information to have a backup plan to back up my analysis. I understand how the whole macro fundamentals or macroeconomic connectivity, but sometimes it's not enough in terms of really going in. And it is something that I will never ever be able to control the market. Like me, there's no way I would be able to control Kim, or even in the past, I think that happens in my past relationship is simply I wanted more of the control component and not really accepting them of who they are. Because, yeah, I'm a control freak. It's just part where, being an alpha male, once you're an alpha male, you're like either your way or no way at all, right? You just want to annihilate every people out there if that makes sense. Just that alpha. I mean, whether you like it or not, both of you are also alpha males because you guys are also very competitive, right? So, which makes sense. And hence, once you start controlling and you cannot control, and that's what happens. If you're a control freak and there is nothing you can control, what is the normal reaction that you will encounter emotionally?
Yeah, anger, frustration, that kind of stuff.
Exactly. Right? Because it's not going your way. So either your way or no other way at all, because you want to control. But you cannot control the market, and hence, in order for you to gain control, guess what? You will not execute because you're not willing to accept that there's a form of risk involved and there's a possibility that you may lose, right? Simply when you guys are doing jiu-jitsu, and that control component is the ego part. That's why it's important to really be in check of oneself. And if once you have that, easy, then acceptance will be easier. How would that make sense?
It does. This is what the district attorneys say when I went to parenting classes. You can't control your kids either. You can influence them, but that's about it.
Exactly. Yeah, like you're absolutely right. That's why with being aware of my kids as well, I think my job as a parent is just is a guide, like to guide them what's right, to guide them what's wrong, and it's up to them to choose which path that they have to take. And if they choose to go to the different path, then hey, it's your journey, right? So yeah, that's why I love trading so much, is because of this aspect. It's now going beyond just M2 and M3 on technical analysis. It goes beyond mainly knowing really oneself. I believe this is, at the end of the day, this is where we're at. Who are we really? Whether as traders, as parents, as partners, or even as an athlete, right? So people will take time in terms of their jiu-jitsu because they need to find their own jiu-jitsu. And that's why I also love jiu-jitsu, is because once you have your own way of jiu-jitsu, that it doesn't matter who you're rolling with, it doesn't matter because you're just focusing on yourself. And hence trading is the same. Now, let's take your example there, Demir. 1 hour and 4 hour time frames. That's you. It's like your jiu-jitsu. Likewise, for your Jared, yours is the smaller time frames because that's your jiu-jitsu in trading. Cool. That's a good one. Alrighty, let me, I don't know who's gonna be on the other end, probably they're waiting, but let me shut this one down and we'll go to look at a market update, okay?
Sounds good. Thanks, Ray.
You're welcome.
Sure, thank you.